Well, greetings, my beloved clients and friends. It was time for another market update. Yesterday, we had a pretty brutal day in the market, and so we want to reach out and have a conversation with you about it. The NASDAQ was down over 3%. Our top holding, Tesla, was down over 12%. Okay, and so we've been saying that this is going to be a challenging year, and it certainly has been. Now, in this business, there's no place for pride. So back in January, I did a video saying, is this a temporary pullback or the end of an era? And I was leaning towards temporary pullback. I said, that's what it seems like. It's about a 65% likelihood. I said that it's just a temporary pullback. 35 that if it's more an end of the era type of move. And it's seeming like the 35% outcome is the one that's materializing. And so what has happened since January? A few things have complicated the situation. Number one, a war in Ukraine started in February 14th, I believe. And number two, Powell really tightened up on his stance on inflation. We already knew that he was going to, his priority had become to combat inflation, but he has really strengthened his posture on that to the point where he says, you know what, it doesn't, whether the economy goes into a recession, that's not the priority, or whether the market pulls back, that's not a priority, or whether the housing market is affected, that's not a priority. The priority is controlling inflation. And so that was a couple weeks ago they said that, and the market, there was still optimism that he wasn't going to really tighten up as much as people thought. And so part of a bear market is, and the bear really came out of hibernation in November, and it is squeezing all that hope out of the market, because there was probably too much hope around November time, and it came time to squeeze some of that out. It was like what Greenspan said in '98, irrational exuberance. That he had seen that, no, there's too much hope in this economy, in this market, but he just threw his hands up, and it continued for a couple more years before the pullback. But yeah, so there's the squeezing out of hope right now. Eventually, once that last ounce of hope is squeezed out, the bargain hunters will show up and reprice things back to where they should be. I don't know if we're there yet. Yesterday was brutal, but I'm not sure if it's quite capitulation. We looked at January 24th and we said it was bad, but not necessarily capitulation. We looked at March 14th and we said it was bad, but not necessarily capitulation. And yesterday was bad too, but I'm not quite sure it was capitulation. So that's not positive news, but we're here to tell you the truth, not to blow smoke. Okay, so but we're closer. More hope has been squeezed out. The acceptance that, hey, he is going to probably raise rates a half, and he's going to do it more. And watching the news, there's still some hope out there. You hear it, and you're like, man, there's still some hope, and Powell wants to squeeze it out. So I believe that this is going to continue to be a challenging market. And so what we got to do is be defensive in these times. Stick with high quality companies that have been through this before, and it's not too difficult to go through and look back and ask How did this company do in 2008? Did it continue to be profitable? Did it hold up? Or did it lose business? Right? How did this company do in 2000? Did it continue to be profitable and continue to generate positive cash flow, or did it not? So those are the kind of companies that we want to be looking at. Companies that have positive cash flow and have shown that they're able to do it in good times and bad. And even those companies are taking hits. So, the market is just selling across the board, and that creates opportunities. Last week we bought a company called T. Rowe Price. It looked incredibly cheap, and it's been through these type of environments before, and it's weathered them. It's the yield is up about 3.5%. Company raised their dividends, so they're confident. Excellent cash flow, and so that's a company we just added to the portfolio. But in general, we're probably not looking where to buy as much unless we see an opportunity. But often we're looking at, is this something maybe we should sell? So that's kind of our posture right now. But I did want to highlight our largest holding, Tesla, which is about 25% of the portfolio, and took a huge hit yesterday. It was down 12%, right? And so only the week before they announced a first quarter earnings, and I was on the call, and it was phenomenal. They were up 87% over the previous year. Elon Musk reiterated that they're on track to do 1.5 million vehicles this year, which last year they did about 900, so greater than a 50% increase. He knows that there's supply chain challenges. What's going on in Shanghai is obviously affecting the company, but they opened 2 new factories, one in Brandenburg, Germany, and one in Austin, Texas. And he says the car making part of our business is probably not going to be the biggest part of our business. He said this robo-taxi is going to be huge. And already, if you lease a Tesla, by the way, very few Teslas are leased. Very few. Like less than 10%. Compared to other automakers, it's very small. Most Teslas are bought. But if you do lease a Tesla, at the end of the lease, you can't buy it. Why? Because they're going to hold on to them and use them as assets for the business and the robo-taxis and stuff like that. So he said that's going to be huge. He said full self-driving. We keep he said we've been promising it for a long time, and each time I say it looks like we might have it by the end of this year, and but we're getting closer. He goes, that's the one thing. He goes, every time we think we're close, I forgot exactly how I said it, but it's like we open another door and there's something we didn't expect behind it. But they're getting very close on that. And he said the Optimus, the humanoid robot, is going to be a huge part of the business. So bottom line is, Elon Musk is the Henry Ford, the Thomas Edison of our generation. And when you find a guy like that, you give him capital and he'll grow it. And you give him your labor and he'll give you a good job. He will grow that capital just over time. And I strongly believe that. That's why it's such a big percentage of the portfolio. It's not a bigger percentage because there could be 12% minus days, but that company is the company of the decade, really. And I've been reading this book called The Wealth of Nations by Adam Smith. It was written about 250 years ago. And they call Adam Smith the grandfather of economics. I've referenced this book, and I've quoted it, but I've never read it cover to cover, and so I'm starting to read it right now, and it's amazing. It's mind-blowing. It's mind-blowing that this guy in 1775, right around there, I think is when it came out, early in the Industrial Revolution, he saw it for what it was, and he wrote, and he described it so eloquently, and it's retained its timeliness over 250 years of the Industrial Revolution. And he starts early in the book, he gives this analogy, he says, or this illustration. And he said, imagine the manufacture of pins. And if someone were to make a pin, or to make pins, apply themselves to the manufacture of pins, they got to get some wire, they got to cut it, they got to straighten it, they got to put a tip on it, they got to rough up the other end, and then put a head on it, and then package it, right? There's probably more detail to it than that, but that's the general process. And he said in the course of a day, a craftsman can maybe make 20 pins. Okay. He said, but he said the division of labor, if you divide up that labor so that you have one guy that all he does is cut the wire, and another guy that all he does is straighten it, and so forth. And you imagine the craftsman who he goes and he gets the wire, he cuts it, then he comes over to his bench and he gets his straightening tool and he straightens it. Then he puts that down, and then he goes over to his whatever he uses to put a tip on it, and he applies that element of his craft. And then maybe he goes to another station or puts down that tool and picks up another tool to put a head on it, and so forth. Versus, imagine one guy, all he does is cut. And another guy, all he does is straighten. Another guy, all he does is sharpen, right? And he says, if you employ that type of assembly line, if you will, and you have 10 or 11 guys to do this task, how many pins can they produce in a day? And the number was like 48,000. I don't remember if it was 48,000 or 4,800. But it was several orders of magnitude greater than if one person did it. So he goes, that was the Industrial Revolution. And if you think of how did that affect, he was talking about the wealth of a nation. If one nation makes pins the old way, and one nation makes pins the new way. Imagine if you're the owner of a pin manufacturing company. That would make you phenomenally more wealthy if you could produce 4,800 in a day versus 20 in a day. You would also be able to pay your employees a lot more and still make yourself a lot of money, right? So the lifestyle of your employees would go up dramatically. You could also lower the price of pins and still make a lot of money. There's room there for the owner to prosper, the employee to prosper, and the customer to benefit. Okay? By a huge amount. I mean, it's not even close. Okay? So that was the Industrial Revolution. And it created phenomenal wealth. And so Henry Ford applied that to the automobile, and he unleashed billions or trillions of value to himself and to his employees and to his customers. And it was a great investment for decades, right? And so I wonder if Elon Musk read this book, and after he made his millions in PayPal, and he asked this question. Well, I'm getting ahead of myself. So the way to create wealth is leverage. If you only have 8 hours a day to work, you're capped out. But if you could buy labor. You could buy 8 hours from somebody else. Right now you have 16. And and the reason that you would buy their labor, let's say for $10 an hour, is because you could probably make $20 an hour from their labor. That's the only reason you would buy their labor, is if you could generate a profit off of it, right? So if one business employs 10 people and another business employs 100 people, all else held constant, that 100 people company is probably the more profitable. Now, let's take that a step further. What if you're able to employ those people and you pay them $150,000 an hour, or a year, $200,000 a year, like Google, let's say? Why would they pay someone so much? Because their labor is more valuable. Because paying them $200,000, they probably profit $400,000, and they're able to pay them and still keep money, right? So to compare two companies, one has 1,000 employees that they pay them $10 an hour. Another company has 1,000 employees that they pay $200,000 a year. Which one is more valuable? All else held constant, that $200,000. Now the same goes for capital, right? If you put a tool or a machine in this guy's hand and you buy those machines, a company, same thing, a company that has one machine versus a company that has 10 machines, which one's more valuable? The one with 10. Because the reason you bought that machine for $100,000 is because it generates much more income. So think of a company, say, what kind of company would employ the most labor and the most capital? That's the one that would be most profitable. And I wonder if Elon Musk asked himself that question when he's sitting with his millions that he had made from the sale of PayPal. What can I deploy this? Where can I deploy this that would require massive amounts of labor and massive amounts of capital? That's what would make me the richest person in the world. I don't really think he asked that question. He was more looking at sustainable energy and how can we transition the world away from fossil fuels. But if he had asked that question, he would have got the same answer, Tesla. Because, I mean, almost every one of his earnings call is pretty much a recruiting tool. He goes on there and he comes straight out and says, if you're a smart engineer and you want to solve big problems, come work for me. He comes right out and says it because he wants to employ people and pay them a lot to solve big problems and add a lot of value. By the same token, he deploys massive amounts of capital. He just built the biggest factory in the world in Austin, Texas, and he's filling it up with this expensive equipment. Okay, the biggest press in the world and the biggest casting machines in the world. There was like 5 companies that maybe could do it, and he went to all of them, and only one of them really could do it, and they didn't want to do it, but he kind of forced them to do it, this company in Italy. And he bought these massive presses. So that's why Tesla is so profitable, and that's not the only reason, but it's a reason why Tesla is so valuable and will continue to be. And if you could think about Henry Ford, his company answered the same question, right? It employed massive amounts of people and massive amounts of capital to build cars, and he put Detroit on the map, and that whole area for decades was incredibly prosperous, and they made a lot of money. Their employees made a lot of money. They were selling these products around all the world, And then, Japan came and ate their lunch, but they had a really long run. And then you look at other companies like IBM and GE, the same thing. A lot of employees, a lot of expensive capital, a lot of high-paying employees, and good-paying jobs, right? That's the place you'd want to go work. They had this incredible run, and then you look at the aerospace industry in the 80s. You remember that, where that's where engineers worked, and companies like Raytheon and Lockheed Martin and McDonnell Douglas and Rohr and Boeing and all those companies, right? They were good paying jobs, and they were capital intensive. You were in this big factory with a lot of equipment, right? And those were great businesses, and they were great investments. Let's continue. And then there was the computer chip. Remember that? The birth of Silicon Valley, because they took silicon and they made it into computer chips, and they were really good paying jobs. Picture, as a scientist or an engineer in a lab coat in a clean room with expensive equipment all around, making these products, right? So, and those are great investments. And then you look at companies like Google and Facebook and their Apple. You look at their company headquarters. It looks like a spaceship, and they employ high cost labor, and they put them to work on expensive computers, and they generate their product. They're not as capital intensive as some of these other ones, but even the oil industry, those are good paying jobs, and they put you to work on capital intensive equipment, right? It's a very capital intensive, labor intensive industry, and it has been a good investment I'm not talking about trading, I'm talking about buy and hold for decades. All those industries were, they had greater than a decade run where it was just an amazing investment. So here's Tesla following that playbook, employing, even Amazon employs, they hire people by the hundreds of thousands, and they put them in these factories, and they have their fleet of airplanes, and so that is a sign of a company that could potentially be a good investment, and Tesla checks all the boxes. So we've talked about different ways of explaining why Tesla is so great, and this is just one more facet to why it's such a great company to be invested in. And so am I worried about a one-day 12% drop would be the conclusion? No. The price of your shares went down, but you didn't lose a single share. They didn't unsell a single car or let go of a single employee, or shut down a single factory. They're having a little bit of challenge in Shanghai, but that factory's back open again. But I don't see any long-term threat to Tesla. I'm not too worried about this 12% drop, and if anything, if we saw it continue to drop, it would represent a buying opportunity. Okay, so just to give some perspective, hope this helps, and we'll be in touch and continue to communicate and what we're thinking and what we're doing and what's going on. Okay, so I hope you guys have a wonderful day.